Hi, Larry Berman here, and here's what's on my radar this week. Everything from the stress test to the mini package of infrastructure that it's a rounding error in terms of support for fixing some potholes. The Biden administration has much bigger agenda here. They need bipartisan support for something, so I imagine something's going to get passed. But, as we kind of wake up on Friday morning, we see that he's tying his support for that bill to another bill that's going to be much more spending. And in any case, it was interesting. So midday Friday, Eric Rosengren, the Boston Fed president, gets on the federal open mouth committee box and he's worried about froth in financial markets. He's watching real estate and the impact of monetary policy on real estate. Housing prices are an issue. They're starting to realize now. Rosengren is not a voting member of the committee this year. He is in 2022. So, what his current thoughts are don't matter in terms of an extra vote that way. And really, it's the chairman, the president of the New York Fed, and the vice chairman's talk that matters for markets, short term, because they're much more influential in terms of policy. But there are side effects to policy. It's good that they're talking about it. When the market starts responding, that's going to be a challenge. So we had this massive pay down in the Treasury Journal account. We're within weeks of the bottoming out of that spend. They're going to have to issue a lot more debt in the coming years. That's going to stress interest rates. You've got this dynamic of a perfect storm building. And it just doesn't speak to multiple expansion here. Now, of course, you get something like the stress test for the banks, and everyone passes with flying colors, and they're going to push a lot more buybacks in terms of the banks and on higher dividends, and they've been lagging there since the great financial crisis, and that's all good for banks. And a steepening yield curve with interest rates rising, that's all good for banks. But really, how much more are the banks worth here in terms of multiple expansion? And if the banks are moving and interest rates are going up, that's a negative for tech companies. And so, you're at a point in markets now where you look at some key stocks like an Amazon and Apple, and you see these, in the case of Amazon, it's been a year now where the stock hasn't made any progress. And it gets up to this level and it starts to fail and pull back. And so we're seeing that in a lot of tech leadership. And it just, I just can't see the markets, moving too much higher here. So, that's really what's on my mind right now. As we get into earnings period, Nike kicked the lights out overnight, and that was, big up move. So there's going to be, wins on the side of earnings, and that's an underlying support. And when you factor everything on the scales of what's the market worth and market risk, you still have looking forward shorter term negatives than you do positives. But the negatives aren't catastrophic, so you're talking about mild pullbacks and maybe buy the dips kind of mentality through the next few months. But how big are those dips going to be? Again, 5 to 10% range, so 200, 400 S&P points, give or take, somewhere in that range. So something below 4,000, but not below 36, 3,700 kind of thing as to where we get a pullback based on the Treasury supply and interest rates pushing up in the back half of the year, inflation fears, and so forth. So all those things are on my mind. When we think about trades of the week, what do we do about it? You can't be long treasuries here for a trade. No way. Got to be short treasuries for a trade. We have to think yields are going to retest their high points that we saw earlier in the year. So that's a no-brainer. So whether you're shorting treasuries or you're long a TBT or a TBNF, the inverse ETFs that play those, That's got to be a trade here. We're seeing reversal patterns on the longer duration assets here. And on the long side, I think you still got to like the energy and the reflation trade and the getting people back to work. So, as that came unwound last week and the week before, we're starting to see that work again. Long side, you got to love energy here, at least still for a trade. I'm not bullish long term, but for a trade, it's still making a lot of sense, as do some of the base metal names here. Have a great week, everyone, and looking forward to a little shortened week with Canada and US holidays.